All right, hi everyone. So today we have with us Stephen Hromin. He's actually an analyst at JP Morgan Chase today, and we'll be discussing about his investing philosophy, how he actually gets started in investing, and maybe if we have time, we will be talking about one or two of his investment theses today. So Stephen, maybe could you tell us more about how you get started in investing and what your investing philosophy is like?
Yeah, sure. So first, Thomas, thank you so much for inviting me on your show. I'm really excited to be here. I love talking about investing in the financial markets with people, and it's just great to be able to share my views and my experiences in that regard. So first, I just want to mention, as Thomas did mention, I'm an analyst at JP Morgan, but I do want to, have a couple of disclosures out here first. Number one is that I'm not speaking on behalf of the firm. They have, certain guidelines for individuals who are, talking about investments. And so, in that regard, this is everything I say here essentially is solely my opinion. And number two, I'm sure Thomas, you mentioned this in previous shows or episodes, is that none of this is financial investment advice. This is just solely our opinion. We're just going based off our own data and analysis, but we are not recommending that you go out there and buy XYZ just because everybody has their own financial position, and I wouldn't want anybody to be misconstrued. So with all that said, I have been investing for almost 10 years now, actually. So I'm 25, and I started investing
Wow,
at
that's
the age of
awesome, man.
six. Yeah, thank you. At the age of 16, when my father actually bought me the Stock Investing for Dummies book, which you might think it sounds silly, but as a 16-year-old, it actually gave me a really great foundation and knowledge base for understanding even just simple things or concepts as price to earnings, what earnings are, what moves the markets, what type of stocks you can buy in terms of growth, value, how people like to categorize small cap, mid cap, large cap, etc. And so, with all of that info, I went to college. I learned about finance further, and then after college, especially, I got really heavily into the markets and really dove into a couple of core holdings that we will discuss today. And since then, I've read books by Peter Lynch, who you might have heard of as one of the best investors of all time. I'm currently reading Warren Buffett's biography. I've read a lot about Charlie Munger and his philosophy as well. And so, I read just about all of the memos that Howard Marks puts out as of the last few years. So I'm very influenced by those investors. That's sort of how I've gotten my start. And did you want me to discuss my philosophy as well, Thomas?
I thought that was awesome. So I actually started investing around 17, quite 1 year later than you. The book that did it for me was Rich Dad Poor Dad. Not that he had great information about how to invest, but the message on why we need to start investing is really strong. And like yourself, Peter Lynch, all this is really the all-time great investment books that everybody should read. In fact, it's a great book if you're just started out because Peter Lynch has a great flair for turning difficult concepts into very entertaining writing. So that was just an awesome book. Yeah, maybe could you tell us a bit more about your investing philosophy, investing style? Like, do you go for deep value stocks, growth stocks, or anything of that sort?
Yeah, sure. So interestingly, and I think any investor would probably echo this sentiment, that question and the answer to that question has really shifted a great deal over time. You don't, even when you're 20, you don't have the same personalities when you're 50. It's a basic example. And so for me, I started out when a couple years ago, as I said, my first stock that I ever bought actually was Microsoft, and it was just,
Mm.
on that note, I recently read the Peter Lynch book, One Up on Wall Street, and he talks about, just go out and think about the companies that you already understand and the products that you love to use and try to research those businesses and see if they sort of fit the mold that you want to have in your portfolio. Is that a business that you want to own? And so with that in mind, that's something that I did years ago. And through that time between then and now, I've used stock screeners. So one of my best ideas was actually Broadcom, which used to be Avago Technologies. Unfortunately, I did not hold that after it hit maybe 100 or 120 from 30, which was my
Oh,
purchase price.
damn.
Yeah, I know. I was, as we mentioned, I was fairly young. I was going to college. It was actually in a college investing account, and so I had been able to use some of the proceeds for college. But anyways, it was a great learning lesson. One of those, if you have a great business that you feel still has potential in terms of just growing their fundamentals, either fundamentals, valuation, or a mix of the two, then you are probably in a good place to keep that business, at least in some form. And so it's kind of shifted over the years, is my point. But generally, what I love to do is evaluate businesses as a whole and not think of myself as a stock investor, or trader, but as an owner of businesses, whether that's one share or the entire lot. And so that's how I like to think about these things, similar to how you might think about owning a barbershop.
Right. I have a question for you. Are you still holding on to Microsoft?
No, I just saw it hit 304 today. Wow. I mean, that's awesome. I think I held it from like 30 to 50 or 60 within. I think so. Yeah, that was
Yeah.
2012. I remember the month. I think it was
Wow,
May
that was
2012 or something.
I think that was a really good entry point, I think. Because they had a period whereby they just stagnant when Steve Ballmer took over, but when after Satya took over from Steve, the stock just went parabolic, man. Like you would think usually big caps like this won't have room to grow much more, but yeah, winners keep winning, man.
Yeah, that's a great point, and I want to also add something, to the point I just mentioned. That is that you're allowed to change your opinion. You're allowed to change your philosophy. Years ago, in that same year, in 2012, Facebook, as you well know, IPO'd. They started out at 38, or they sold shares, I think, at 38 or 45, one of those two. And a couple months or weeks later, it was all the way down to 19. And I remember thinking, just based on the business, that I thought Twitter, my young brain at the time, I saw my friends on Twitter. I thought they would be doing much better over the next 10 or so years as a business. And while they have grown their users a great deal, what I saw with Facebook is they have just the best management and, in my view, the best business model in that space. And so when, as we just spoke about before the recording started with Cambridge Analytica, when all of that was transpiring in summer of 2018, I took a look at the company and I thought this is something that I want to own just based on attractive valuation, a attractive business at a fair price in terms of their business model, and all the pieces really fit together for me. So you're allowed to change your opinions, is all I want to emphasize there.
Yeah, I remember during the Cambridge Analytica period, Facebook was coming to a very attractive valuation. I think its PE was around 20, or it might be even below 20. And from the investors I speak to, most people would want to avoid it, which really highlights like how difficult it is to be an investor. Even though it is simple, like it's very clear that Facebook had a super good business model in terms of how targeted their advertisement are, it being very relevant to consumers, generating very high ROI for advertisers, and the network effect was just immense, right? How were you able to go against the consensus at that time? Because most people were very worried that regulations would come in and hit them, and Facebook might just disappear. Similar to what we are experiencing now for Alibaba, actually. Like we see a lot of fear on the streets. So how did you develop that conviction and go against the crowd?
That's a good question. I think for myself, I sort of mitigated the effect that sentiment would have on me by learning as much as I could about the company, by reading their 10Ks and their quarterly earnings calls. You can learn a lot from listening to, in this case, Mark Zuckerberg, Dave Werner, and Sheryl Sandberg is her name, and all the different management individuals at Facebook. You can learn a lot just from listening to what their views are on, user growth, on the different pieces of what they are doing with WhatsApp, with all their different business units. And the point I'm trying to make here is that if you're not in tune with what is going on underneath the trenches, it's going to be hard for you to remain convinced when there is trouble brewing. And as we all knew at that time, Facebook was very strong, but you had to have some insight or some thinking that they would eventually settle with the FTC, whether that was just a monetary fine or it was some kind of agreement that they would increase, their privacy practices, or anything of that nature. So my point here is that you have to think that the worst is not necessarily over, but that eventually in the next 2 or 5 years, that the company will come out of it stronger overall. And so if you don't feel that way, then you'll be one of those people selling, I suppose. But you need to try to, I guess, keep yourself as informed as possible, and you will mitigate that effect. And as you said with Alibaba, I'll be honest, sometimes I feel myself getting a little caught up in the kind of the FUD or the fear, uncertainty, and doubt that a lot of people are spreading. But the facts, honestly, from my vantage point with that business and what's going on there, is that Jack Ma months ago said some things that, let's just say and be honest, that Chairman Xi did not like. He since then they have done a lot to rectify their practices. They got rid of the choose two of one, and ultimately the government is looking at a lot of different businesses and making sure that they're reducing corporate greed. Essentially, that's what it seems like, and that they want to improve the middle class. I mean, from my remembrance or my memory, I think there are still 1 billion people or so in China that still have yet to come into the middle class, or the upper middle class. And so there is a lot of mobility still that can be a tailwind for Alibaba and those businesses. But you have to keep yourself educated is my answer there.
Yeah, the government talk a lot about common prosperity. I think it started back in late 1970 to 1980 when Deng Xiaoping was still president of China. But right now, so previously they really allowed individuals to become rich first. But now what they are working more towards is for the middle class to to occupy a bigger proportion of the wealth, which is why we see companies like the edutech industry getting destroyed. But I think Alibaba is still making China a better country as a whole in terms of getting products to the rural areas of China, making it more efficient, digitizing the entire country. And I saw your report. Alibaba not just has a sprawling e-commerce operations, they are also very much into all the SaaS product. I think you mentioned DingTalk, which is something like what we have for Slack. And then there's also Alibaba Cloud. Could you go more in depth into Alibaba's operations?
Yeah, sure. And so the way I like to think about that company is they really have two main drivers. So essentially, they have four reportable segments, but only two of them really at this point are valuable in any regard. Number one, that's e-commerce or their core commerce segment, and that is generally what people regard as driving the value today or of the last 5 years. And then the second piece really is their cloud computing, and that is what a lot of people are saying will be growing much faster than the commerce side over the next 5 to 10 years, simply because we all know China and every country at this point wants to become, digitally sound and savvy. And so I think Alibaba can absolutely benefit from that. And there's no reason to think that their current 40% market share, a number one market share in China, is going to abate or be reduced. I do know that other companies are, coming for them in both of their segments, but I still see that their growth has been very strong. In terms of the in-depth, so essentially Alibaba has set it up such that they have many different segments within e-commerce, particularly that are covering a lot of different channels. So in one you have business to business, and one you have consumer to consumer, and then you have business to consumer. Then you have AliExpress, which is essentially coming from China to, let's say, the U.S. It's international. Then you have a company like Lazada, which they purchased I think in 2016 or 17, which is a
Right.
South Asian or Southeast Asian e-commerce retailer. So they're really exposing themselves to many different facets of e-commerce and not just simply business to business in China, for example. And so what's really great about them is you're not just getting one single unit, you're getting an entire suite of services in e-commerce, number one, and number two in cloud, which if it's anything like what Amazon has done in the US, it will be a very big player in the market, and I think investors will benefit from it. I think a lot of what's gone on now is I don't really think anyone's arguing that Alibaba is a strong company, or many people are not. I think what's going on now with the stock price is just the regulatory uncertainty. And as we saw with Facebook, that's kind of where I was able to take advantage. If it's anything like that, I think investors can, maybe put that to use, or at least take advantage of it if that's the way that it plays out.
Yeah, I agree. I think the market is having difficulty pricing Alibaba right now because of all the regulatory concerns. Similar to Facebook back then, because they don't know for how long these companies are able to compound at this rate. But you rightfully pointed out that a lot of companies in China would be digitizing, and cloud would be a very big segment. Just for our viewers out there, China is currently 1/10 of China's public cloud is 1/10 of what United States is experiencing now. So the runway remains super long for Alibaba. And Alibaba is the largest market share holder of cloud in China, followed by Huawei and then Tencent. I'm not sure, have they started to turn a profit for their cloud division yet in the latest quarter?
So on the last 2 quarters, on an adjusted EBITDA basis, they did turn a slight profit.
Right.
Essentially what that means is not adding back depreciation, but interest, tax, and amortization, which frankly are not that big at this point for those businesses. They are just about break even. So running from large losses, let's say 5 years ago, to break even now, I think they have essentially what they said in the last call. I believe the CEO Daniel Zhang mentioned this, is that they've finally achieved the economies of scale that they're looking for in terms of break even, and now that is going to bear fruit even more given all of the capex they've already spent over the last 5 or 10 years. A lot of that, the cash flows will be, frankly, I think they're going to be coming in very hot in the next 10 years if things go the way that I believe they will.
Yeah, I thought that was a great point because when Amazon started their own AWS, it is also because they are the largest user of cloud services themselves, which is why they are able to keep the biggest scale first. And likewise for Alibaba being the largest e-commerce platform in the whole world, actually, I think they did 1.2 trillion in gross merchandise value. And by comparison, I think Amazon is just at 300 to 400 billion gross merchandise value. I remember, like, if we add up the next top 5 e-commerce company, it is probably just about close to Alibaba. Like, it would not even exceed the amount of transaction Alibaba do. So when it comes to a game of e-commerce, or rather public cloud, whereby it is winner take most market, Alibaba stands a really good chance to enjoy the economies of scale. Maybe we talk a bit
Absolutely.
more about their e-commerce arm, because I think their e-commerce arm is more than just a C2C platform. They have a Tmall, they have Taobao, and then subsequently, I think they provide services to all these merchants when it comes to marketing, inventory management. Could you talk a bit more about that?
Yeah, sure. So as you said, they have Taobao, they have Tmall. I think Tmall was probably their first one way back, although I don't quote me on that. They essentially different segments, I suppose you could say, for each piece that they want to have within e-commerce. So as we mentioned, we have Taobao, Tmall, logistics services that will cover that aspect of the market. So they've essentially tried to set up a conglomerate that will cover every step of the way, from advertising, which is something they're now selling on their websites, is pay per click, similar to what Amazon does, to the listings, to the logistics shipping piece. And speaking of shipping, I don't know if you've recently read, but I think I did read in the Wall Street Journal that about a month ago, that Alibaba is looking to bring to the world 72-hour shipping anywhere in the world
Yeah, that's just
within
amazing,
three
man.
years. 3 years. So if that, number one, if they're able to do that, number two, if you know, the government is able to double GDP by 2035. I think that's the latest goal. And those two things happen. And as we mentioned, if other pieces are coming into play, I think Alibaba is very well set up, because the world is not going back to a place where we're all taking our weekends out shopping in Macy's, shopping in Sears and similar mall. Not that we won't do that ever, but we're not going back to that world ever again.
Yeah, I thought it was interesting you brought up the intense investment into the logistic arm, because one of the most common bear theses I hear on from other investors is that Alibaba margins are slowly decreasing. But I thought, like, that was very superficial thinking, because they are pouring back heavily in reinvesting into the business, especially the logistics arm. If they are able to deliver to anywhere in the world within 72 hours, the TAM, the total addressable market, would just expand by so much. Because right now, a lot of businesses on other e-commerce platforms, like in Singapore, Southeast Asia, or even on Amazon, a lot of what these merchants do is, because China has an insane supply chain. Like, if you want to create a product, you just go on to AliExpress, which is one of Alibaba's commerce website, whereby you are able to get a manufacturer to design a tumbler, a notebook, and put your branding on it and start selling. The problem with this is it takes about 1 to 2 months. So for businesses on Amazon, all this, where all their products are sourced from China, the lag time is the biggest challenge. But if we imagine, like, if Alibaba is able to shorten it to 72 hours, like what you mentioned, that would change the game altogether. I don't think consumers in America or in Southeast Asia would even need to buy from these drop shippers, right? These third party, you just effectively cut out one more person in the supply chain, and you can just buy directly from Alibaba because of their logistics capabilities. So I thought that was really impressive. And there's a slight difference between Taobao and Tmall, because you rightfully pointed out they are very strong in advertising revenue, and this comes largely from their Taobao.com website, because they don't charge merchants any commission at all. So this is one of the quite unique model on e-commerce. I don't think there's another player who don't charge commission at all, but what they charge is in terms of advertisement, or in terms of if you need marketing assistance, their artificial intelligence is able to help you design your storefront, come up with the copywriting wordings, all this. So it really enables all these small merchants to come online very, very quickly. Yeah. Right now, I wanted to go back to the logistic arm, which is China. I think for most places in China, you are able to get the product just within 1 day.
Yeah, that's great. And I think a couple pieces on what you just touched on, I wanted to discuss. when people talk about the decreasing margins, I think that's a fair argument. It's something to look at. When you see the margins going down or going up, you have to think about why that's the case. I mean, that's just a given. Number one, I think you have two pieces. Number one is that, how much are they spending in investment and in the expenses? And number two, in kind of a steady state mode in 10 or 15 years, how much CapEx do they need to plow back into the business? Those two numbers might not be the same. And what I mean by that is uh, that my dad explained this to me years ago, and I never understood it until recently, is that what people now understand about Amazon that they didn't understand 20 years ago is that the way that they built this company is that they spent so much and they did so well with their investments that now they can essentially turn off the spigot, as what he would like to say, turn off the spending, and then all of the revenues can, not all the revenues, but a large percentage can come down to the bottom line, can come down to the cash flow statement. And so if Alibaba follows the same model, you really want to look at what are they spending, and then what percentage of that is actually maintenance or is needed to actually fund what is being I guess, transacted upon in this case for the e-commerce. Um, that's kind of how I would think about it. Otherwise, another piece about what you just said with the global shipping. I mean, we all know, we all see how well Amazon did when they were able to build out their 2-day Prime. I mean, we see what kind of growth they've had with that. And so, if you just apply the same type of trajectory to Alibaba or any similar company doing that for the world, I mean, I think that you just, that kind of speaks for itself in terms of what you might be able to expect in terms of subscription. And I think, don't quote me on this, but I believe that article mentioned they were looking to do some kind of subscription for like $3 a month or something like that. And so there's a lot of runway for that as well. I mean, they probably don't even have to make a profit on that for years. So with all of the different tailwinds, you can probably see why I'm very excited about the business. And the last point I want to mention with what you said about, you briefly mentioned about the education stocks in China or the education companies is, the difference between them and Baba, Tencent, Baidu is, at least for Alibaba, which is the business I know best, they do seem to be providing a valuable service to society in terms of increasing commerce, moving goods from here to there, sort of like a modern day Silk Road. And so I think the Chinese government does value that on some level. The question is, how are they going to sort of get through this regulatory period where there's a lot of uncertainty? I don't know if that in the future will mean that China will have to come out and say, okay, we're done with regulations, or if it's just going to be kind of a quiet period where we don't hear anything for 6 months, and then Baba kind of goes from A to B in terms of stock price. I'm not sure. But all I'm saying is that versus the education companies, Baba is definitely creating value for society, whereas in education they were kind of gouging parents, and make essentially contributing to them spending maybe a quarter of their income on tutoring. I mean, that's just insane.
Yeah, I thought it was a great point that you brought up the edutech industry because one of the biggest problem the Chinese government highlight is their falling birth rate, meaning like people are not giving birth fast enough. And the largest deterrent from that was high education costs as well as high property costs, which is why you see the China government come down really hard on profit making for these two sectors. But when it comes to e-commerce, it is still very much aligned with what the Chinese government is doing, which is to achieve growth through domestic consumption. And right now, their focus is really on reaching the tier 3 and tier 4 cities. And all the e-commerce players in China is starting to pivot towards that. There's actually an acquisition which I'd like to ask you about. Their Fresh Hippo, as well as the recent acquisition Sun Art. Not sure how you see about Alibaba's new retail strategy.
Yeah, so I don't really know much about Sun Art. I think it's, from what I understand, it's something to do with offline commerce, but I would need to do some more research. It is not a large piece of their total conglomerate business value, so that's probably why I haven't done all that much work. But I do know that they recently acquired them, and so their financials will kind of be a little bit messy for the next 2 quarters, I believe, until they're fully, incorporated on a year-to-year basis. And then the second one is Fresh Hippo, which I believe grew very fast in the last quarter. I don't recall the exact number. I think it was over 100% year over year or quarter over quarter. And so I think that's, from what I gather, it's a some type of grocery business, sort of like a Peapod perhaps. But you can probably elaborate further. I do want to point out that those smaller players within the or pieces within the total conglomerate are growing very fast. And so I think in terms of KPIs, I don't know if it was CEO Daniel Zhang or CFO Maggie Wu who mentioned that they don't really look at KPIs in terms of specific numbers, except for what type of value they're creating for society, and whether that is kind of like a statement that's looking to appease the government, or if that's a legitimate point that they don't look at numbers. Either way, whatever they're doing seems to be working from a business standpoint. And so with Fresh Hippo and Sun Art, I think they'll find the right way to incorporate them. I wish I could provide more color, but frankly, I just haven't looked at them all that much given their small size in relation to the rest.
Yeah, you're right that the new retail strategy is still a very nascent segment, and especially as foreign investors like myself in Singapore and yourself in the United States, I'm trying to visualize like how this is going to look like, because based on their goal, it is to transform offline retailing, right, to mix it into a hybrid format for groceries, real estate, home furnishing, pharmaceuticals, etc. So I thought like that was a very exciting segment, but so far it's still very early stage. I think the closest way to look at it is from the Amazon. Is it called the Amazon Go store, whereby they start to have those real supermarkets, whereby I guess you can purchase products, and if you purchase like up to a minimum size, correct me if I'm wrong, like then they will deliver it to your house. You don't have to carry the products back, because sometimes like when you're browsing books, having a hardcover to look at, it's a better strategy. So like having this dual mode of doing commerce may be better for certain segment, especially in groceries, I would think, where in Asia, a lot of the consumers still want to have a look and feel like what they're buying, but they don't exactly want to carry the products all over the place.
Actually, I'm not sure about the piece where you said that they can deliver it to your house over a given value. I'm not sure because I've never used the Amazon Go store. That could be true. In fact, in Amazon cases, probably is, just given the way that they do things. But I would say that that sounds very exciting, and overall, I think that's kind of a way of them entering the offline market in sort of a new way. And frankly, like I said, I don't believe that offline commerce will ever be extinct. I mean, in some sense, people like to go, perfect example, to a grocery store and see the types of vegetables that they're buying, the types of meats, and what types of all the different foods that they're and drinks that they're getting. And it's not just those items, although food, clothes, anything of that nature, perhaps even electronics, where you can try things out in the store. Until the metaverse comes here, which is, I guess, a separate topic.
Right.
But overall, I think it's a way for them and Amazon and other companies to leverage their capabilities in the offline world, which they see is still viable, but just in a different format than the heavy capex, low return on equity department stores.
Right. I also wanted to ask, would you be concerned about the intense competitive landscape in China? Like we see the rise of Pinduoduo, growing extremely rapidly within like 3 to 5 years. What do you think about competition and Alibaba's moat?
That's a good question. Frankly, I think the competitive landscape in China actually makes all the companies better, leads to more innovation. And so overall, I think they will be fine in terms of what they've been doing. I know that their growth rates have slowed down somewhat, but given their size that they're coming to, that it does not shock me, nor does it worry me. If something changes in the future where they would go down to low teens or anything of that nature on a consistent basis, then I might reevaluate. But in terms of competitive landscape, they I mean they all make themselves better in a way. And plus, if I can mention, from what I understand about Pinduoduo and JD, they have a slightly different model. I believe Pinduoduo is more group buying for agriculture, which is very just bulk item products, that serves a different market than Baba. And then on the second piece, JD is a more logistics driven company. And so they're all kind of in this odd Venn diagram where they kind of each like dabble into the other company spaces, but not in a direct way. And so, with all of that, as I mentioned, to that point, Pinduoduo and JD seem to be lower margin offerings, and I'm not sure if they will be able to, ramp up the return on equity that they like. I like the numbers that I'm already seeing out of Alibaba. I don't feel like I need to project any crazy growth figures to justify a fair price at this point, especially 160 per share, which is only 420 billion for the entire business.
Yeah, exactly. I think at today's price, there are many things like we don't have to go to the exact sense in order to determine like there's a big margin of safety for this company. Maybe you could describe about how you look at valuation for Alibaba.
Yeah, sure. So I've used a couple of different models, sort of a couple of different things in my head to determine whether I feel it's a good buy. At first, I tried using, just a standard DCF or discounted cash flow, where I'm looking at the types of cash flow they can generate, and then discounting it back to a fair value, or fair price today for those earnings. And the second piece, I've kind of gone. a couple different ways just because of everything going on. I want to, I guess, cover all my areas. The second piece that I tried to use after watching a couple videos and reading some interesting blogs is actually some of the parts, how I feel that the businesses will grow in the next 10 years, what I feel a fair PE or PS or any multiple at which it will trade in 10 years, and then discounting that back to see what type of discount rate is needed in order to get to today's price. And then lastly, I've actually recently started thinking about just like a broad-based what type of cash flow per share are they generating now on a free cash flow basis? What will they do in 10 years, just roughly based on a decent growth rate? And then what PE will they, or P to CF, what will they warrant in that market based on their future growth and based on hopefully less FUD or uncertainty with the CCP and the regulatory environment there. So through all those different lenses, I've tried to come up with what I think a fair valuation is, and it's not easy given everything happening. But in a sense, if I can just say this, I don't think you need to be exactly right. I think there is no exact correct answer on evaluation. You just have to have a range, and then if you have as you said, margin of safety solidly outside that range, you can make a bet one way or the other. I don't short, so for me, it doesn't really matter. But either way, I think that's the general idea is you want to have some type of, football field sort of range, 20 to 80 or something like that. And if you're way out on one side or the other, then you make your determination, I guess.
Right. I think that's a perfect place for us to close.
Yeah, good question. So I used to run a website that would post a couple of research reports, but I actually recently just shut that down because I've just gotten very busy and it wasn't really serving anybody or myself anything. And so for myself, you can find me on LinkedIn. If you do have a LinkedIn profile, we can probably put that in the description if that works. But otherwise, I don't really have any other sort of places on Instagram. I do have an Instagram, but it's not really used. You can find it at Hromin Finance. So my last name and then the word finance after. That's one word. Otherwise, if you are on LinkedIn, that's just where I post the most often. It's just my first and last name. Again, we'll put the URL in the description box.
Yeah, awesome. So with that, thank you for watching.